To take a quick look at the S&P 500 as we get ready to trade tomorrow, Friday, March 5th, and the non-farm payrolls report. This could be a big market moving event, and we already had a lot of drama today on Thursday. And as you know, we are heading into the ES contract rollover point. 1 week from tonight, that's when the symbol rolls over, and then the week after that, along with monthly OPEX across the market, the contract expires completely. So we always see some really big wild swings, and maybe today's sell-off was a lot more about that than it was about anything Powell had to say. It just happened to be that the market decided to sell his words the minute they started coming out of his mouth today. Okay, here's where we open. Over on the left side of the chart, right on this blue line, this represents the price where the 50-day simple moving average was. Open just below it, took it out, set our initial high for the day, our initial balance, and then we broke the 50-day and sold off, more than doubling down our range at that point. Found our initial balance low, and then began to squeeze into the European close. They did not want to be short ahead of anything Powell might have to say, plus non-farm payrolls report in the U.S. on Friday morning. So they got to squeeze, pull back a little bit after that, and then squeeze again into noon for Powell. And literally, this is the epitome of the scene of the crime. Our high of the day was literally right when his remarks started to hit the wires, and we rolled over from there and sold off 120 points from 38.43 down to 37.23. At the end of the day, we bounced, but could not regain the halfway back point on the day. Fizzled out from there. Closed not really that weak. I mean, well off of the low, but not really that strong either. 37.69 and change. When we look at the roadmap, here's how it all played out today. We filled in this gap here to the February 1st close, and we looked down and took a look into the gap to the January close. This was on a Friday as well. So this Friday that ended January and the Friday that ended February were both big sell-offs. Are we going to break that pattern tomorrow with non-farm payrolls and have a good day, or are we going to follow through on some more selling? On the downside, we would see a break of today's low and fill this gap. I'll show you more and more of the roadmap as needed during the day tomorrow, but obviously there are more gaps and levels to look at with our 100 days sort of poking its head out from the bottom of the chart here. Overhead, we have a 10 and 20-day simple moving average bear cross happening. This started here at the beginning of the week. It really was more about the 20-day rising through the 10-day, more so than, so it really wasn't technically a bear cross. But now we do have a fully crossed down 10-day that is falling, and now the 20-day has rolled over and is falling as well. And if this 10-day keeps falling a couple of more days, it's going to cross down through the 50-day. And you can go look at Apple and Tesla and some other stocks and see what happens when that occurs. So we haven't had one of these in a while, probably since the fall. So we do need to get back up here and repair some of this damage. Maybe if ES, big contract holders got what they wanted today, maybe we're going to start seeing the swing back up tomorrow after we get the non-farm payrolls report. We'll see. And we do have a scene of the crime at least to return to at our high from today. Anyway, I want to go on to a newly revised, quote-unquote, simplified daily chart. This is where I had a measured move target that we completed, several weeks ago. So I took that off and I added something new to this chart. I added a bear fork, and I'm using the January high down to the low that we struck at the last trading day of January. And the third plotting point is this high that we just made a couple of weeks ago, the current all-time high. And lo and behold, as you can see, today we sliced right through the median line of this fork, but reversed and held and closed back above it, or sort of like right on it. If at our low today, the S&P held the bottom of this bull fork that we have been in, and we have been using ever since we set the third plot point on it with the October low. And the median line of this fork has been great for judging, when we're going to see a new all-time high and either go parabolic and really break out, or fizzle out and roll over. And you can see that all of our highs have sort of looked above this median line and failed. including this one here, the most recent one. We literally touched the median line and have rolled over from it. And here we are finally today, finally revisiting the bottom of this fork. If we were to have a day tomorrow where we come in and we break below today's low, down below 37.23, that will automatically be breaking this fork, the bottom of it, and we have to have something else to judge by. And that's where this bear fork comes in. If we were to come all the way down here and test the bottom of this fork, say tomorrow, that would be a nice clean 100 points more down from Thursday's low to get to 36.22 and test the December low. We've talked about this on several videos. Looking to the left again here. This December low, it was previously the November high, and then the December low, great level of support and resistance at 36.33 and change. So we would be taking just a little look below that and maybe reversing off of it. If it happens tomorrow, that's where the level is. It gets a little lower and a little lower as the days go on. On the flip side, if we come in strong tomorrow and we take back our 50-day and our 10 and 20-day simple moving averages, and we're trying to judge where we are either going to break out or set another lower high again and roll over again, we look to the top of this bear fork. If I had just went ahead and drawn this and put this in the day of our all-time high at 39.50, we could have pretty much predicted where all the highs were going to fizzle out from here on out, because look at that, the top of this fork. Every single high sort of looked at it and failed, looked at it and failed. Well, tomorrow, I'm sorry that that label keeps popping up. Tomorrow it would only take about 39.07 to hit this, the top of this fork, and if we could break out of it and close up out of it, then we're going to be back on track to aiming at the median line again of this bull fork, and that now has risen above 4,025. So we're going to be well up into 4,000 once we get back to this bull fork again. However, if we break the bottom of this fork, we have to honestly kind of re-examine if we can even use this fork at all anymore, and we'll have to redraw and come up with something new, maybe a series of much smaller forks. Like, you know, more the size of this this small bear fork that we're looking at right now. So that's food for thought for tomorrow. You know, if we hold this and continue up, you know, maybe finally when we break out the top of this fork, that's going to give us the signal that we're going back to the median line. But if we break the bottom of this fork, we have the bottom of this new bear fork to sort of judge things by, intermingled with the stuff that we have on the roadmap. You know, we have the 100-day simple moving average. We could just make a little lower low and reverse off of that and maybe come back later next week and search down to the bottom of this, you know, or we could break down through the bottom of this bear fork and really sell off all the way down to the 200-day. But this at least sort of gets our hands around things, because with the S&P 500, you can't just shoot to the moon. You have to have realistic goals, because it only trades with options. Options aren't investments. Options are bets. And if you don't have a handle on where your targets are at, you're just wasting your money buying puts and calls if you don't have, you know, an honest, good target to shoot at. Okay, that's it. Have a great rest of your night. Hope this video helped you out. As always, good luck and good trading.